explain in layman's terms the bond market. How do bonds relate to the Dow, if at all? Quite simply, a bond is just issued by somebody that wants to borrow money, whether it's a corporation, your local city or county, your state, the federal government, foreign companies. When they want to borrow money, they issue a bond. The interest rate that is charged is based on the risk. That's both the time horizon of getting the payback and then how risky financially that entity is. Now, the question of how this relates to the Dow, or I choose to use S&P 500 as a little bit more broad measure of the stock market, is multiple ways. And as the question came in, I tried to jot them all down. Um, First and foremost, most Dow companies borrow money some way or the other, whether it's short-term bonds or long-term bonds. They borrow something just for ongoing operations, and they also borrow longer term for capital improvement projects. Hopefully, more and more doing that lately, and we could keep the economy growing. But so as bonds change, if a bond yield goes up, the bond goes down in value. So as the company goes to issue new bonds or refinance the ones they already have, where the interest rates have moved to will play a very important role in their earnings, depending on how much they borrow. So, increase in interest rates overall is bad for the Dow or the S&P 500 because interest expense will be higher, earnings will be hurt a little bit, and the stocks related to that should go down in value.